Hey, what's going on, Wayne? How you feeling, man?
People was good, bro.
Not too much, man. How was your weekend?
Man, it's good, fam. All good. I'm gonna head to a kinfolk birthday party after this, so still going. How was yours, man?
It was great. It was great. It was great.
That's what's up.
Just trying to stay focused, man. You know how that
Yeah,
goes.
back to it, bro. Already. What's
Yeah.
happening, KK? Leon,
What's
What's
up,
going
bro?
on?
what it do? What it do?
Oh, did I say? Oh, hello.
Oh, you
I'm sorry. I was talking. I thought you heard me. I was like, "Dang, he didn't even respond to me." No, hi, how are you, Sebo?
Nah, man, I'm good.
Hey, Coolio.
Good,
What's
good,
going
good, good,
on?
man. So we're gonna have a good meeting, man. I got a lot of charts to get through, so I am going to get started. Let me just send a final alert out to the team, let everybody know we are live, and go from there. One
Yeah.
sec. Glad everybody had a good weekend.
Yeah, mine was pretty straight.
Good, good, good.
Mine was busy packing.
Good, 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 good. Let me see.
What's up, y'all?
What's happening, Peter?
Hey, Peter.
Hello, hello.
Either. Okay. I see that microphone is on today.
Hey, good morning.
Yeah, I actually got time to myself for
Happening.
once.
That's good.
Good morning.
Okay.
What's good, KD?
Oh, we got Katie. We got a special guest on here today. So
Early and not late.
I'm just checking if y'all live. I said good morning. Y'all didn't say it.
Good
Oh, man.
morning. Well, it's good afternoon.
I know I was checking if y'all alert.
Oh yeah.
Yeah. So yeah, man, we got some good stuff to cover today. So we normally give the team a few minutes to get on, probably like 2 more minutes, and then we'll go ahead and just get started. So I'm gonna try to stay on topic and on time today. So let's see. We will stay on topic and we will stay on time. I'll affirm it. Let's see. There we go. Okay. All right. Just wanted to make sure I put this out there. No, again. So, yes, I guess everyone knows now we're on here. All right, cool. So let me see how many more minutes we have. Yeah, I'll give it another minute and we'll go ahead and get started. Yeah. So, but yeah, man, we should have a interesting week. We got a lot to cover. So, okay. Last one here. So now I've notified everyone. Good. All right. So let's go ahead and just hop into things, man. All right. So by watching or reading this, you're saying you understand the following. I am not a financial advisor, and this is not trading advice. This session is solely for educational purposes. There's significant financial risk associated with options trading, and I'm not liable for your wins or losses in the market if you decide to act on this information. All right. Cool. So, man, news and sentiment this week. We don't have a lot of Fed speakers this week, which is always a good thing, right? We have Harker on Monday. So, okay, all right. So we got him pre-market at 8:15. Interesting. The market fell off a cliff on Friday. And so we had an interesting place in the market right now. So just This should be a good one. Bowman on, okay, so they stacking them up on Monday morning. We got Bowman at 8:30. So another 2 Fed speakers within 15 minutes, an hour before the market opens. Interesting. Then we got Harker again on Thursday after the close. But the economic data this week that's going to be on watch, obviously, is CPI. The good thing about CPI this particular month is the fact that it's on Thursday. So it's not the fact that it's not on a Wednesday and because you know how it is typically on turnaround Tuesday heading into the close, everybody is it's just a little weird heading up to CPI, especially when it's on a Wednesday because of how Wednesday is. So it's just it kind of throws the week off when it's on a Wednesday. So we have it on Thursday. That's a good thing. But what's the thoughts? How do you feel? I mean, does anybody have any thoughts on CPI this particular cycle? I mean, last month was cooler than it's been in a long time, and we had a big move off of CPI. I mean, anybody have any ideas or thoughts of what they're expecting this particular cycle or month? If not, that's cool. But yeah, it's just just for people that don't know, the consumer pricing index is what CPI is. It measures the inflation and the economy on the consumer side, right? And it was cooler than it's been. So the Feds, as far as we can see just from looking at CPI, because obviously there are other components to measure inflation, but CPI has been coming down. So I'm expecting for it to continue to come down. I mean, unless there's something that changes. So we'll see. But yeah, so we got CPI on Thursday. We got jobless claims on Thursday, and we got PPI on Friday and consumer sentiment on Friday. So PPI, obviously, it measures the producer pricing index. So it's the producers and stuff like that, the people who are obviously making the whatever we're consuming. And so whatever CPI is, we pretty much get the same sentiment with PPI for the most part. I haven't seen them be on different accords in a long time. So that's good. So we don't have a lot until later on in the week, but we got those Fed speakers tomorrow. Now, you all know that Monday is typically an indecision day, but for Mondays, we typically get, because you get a weekend and then the markets kind of have to recalibrate themselves. So Monday is one of them days where we kind of sit back and watch, but we had a crazy Friday. So Monday should be interesting. And so let's see how that goes tomorrow. All right, this is how we ended on Friday. So we had blood everywhere. Amazon held up pretty nice after that strong earnings, really strong earnings for Amazon. So that was a pretty good. I mean, since it's not hard to see the green on this chart with so much red. I see NVIDIA up there. I see AMD, a little lighter green. QCOM is up there holding up as well. Microsoft. A few of them in there that kind of held up a little bit, but those were ones that just kind of stood out. But Amazon was a pretty good chart, but we'll get to that. All right, so this was how we ended on Friday in the stock market, just in terms of stocks alone right here. We had consumer discretionary was the only green sector during the close, heading into the close on Friday. Now, if you see on the before, man, this is how we ended before last Friday, the Friday before, and we had communication sector, communication services. So consumer discretionary was the second, the second greenest sector, or one of the second bullish sector, most bullish sector of last week, and it finished stronger this week. That was interesting, but it's good to see, man. But it's a lot of stocks that were in that's in that sector that were probably beat down. I'm just looking at how tech finished last week versus how it finished this week. And utilities, so utilities still remain in the bottom. I just like to look at that and analyze how they finished versus, because a lot of times they kind of flip. Now, as far as options go, we got on Friday here. This was just on Friday. On Friday, Tesla had the most call flow, options flow that went. The most calls bought was on Tesla, AMD, Meta, NVIDIA. So those were the top calls purchased on Friday. And on the put side, we had Apple, Carvana, NIO, and BKNG. On the week, the most call flow went into Meta by a long shot. And we had Tesla, AMD, and Google. On the put side, Microsoft by a long shot, NVIDIA, Netflix, and EMPH. That's KD stock right there, man, EMPH. So see how that goes. Now, the thing about this, man, when you see stuff like this happen, you can't just necessarily assume that that means it's going to be bullish in the time frame that you're looking to trade. So I always go and go looking around to see where the flow is actually going, because that doesn't necessarily mean they could have bought up calls for 2024 or something like that. And so it gives you the illusion that there's some bullish, that the stock is bullish in the short term, and it's not. So it's, we have a lot of bots in the Discord where you can actually go and monitor the flow and see what's going on, and you can see exactly, and you can look at the heat maps and see exactly where the flow is actually going, where the open interest is too. So sometimes it's good to just watch that stuff too, not just looking at just to see when you look at the calls and puts being bought, because that can be it can throw you off because of the strike spoofing and stuff like that takes place. So just be careful with that. So at this point right now, where would you guys say we are in the market in terms of the point of maximum financial risk? Let me see. Hold on. I remember listening to a podcast mentioning CPI being a lagging disclosure. So the Fed's actions won't be showed through CPI until later. See, well, the thing about that is, let me pull this chat down here. Let me put it in somewhere where I can keep an eye on it. So if something pops up, I can actually see what's going on. I will post it over here so I can keep an eye on it. So yeah, with that, but the thing is this. So yeah, a lot of that stuff, it is lagging because every CPI print we get. So for example, when we get this CPI print, it's going to be for July. So we're getting July CPI reading in August and so on. So that's how it works. But and the Fed doesn't provide us rate hikes. Well, the FOMC doesn't meet until 6 weeks apart. So even if the information was real time, we wouldn't get a decision from the Fed for 6 weeks, because we just had, when was the last Fed decision? It was last week or the week before? I think it was. So then we probably we won't get another print we won't get another rate hike or pause or whatever, just say another Fed decision until 6 weeks after the last one. So yeah, so that is true. The information, it is lagging that we get. And also, and I can't even say that I fully trust that information either, because even I remember at the height last summer when inflation was so high, man, it was just everything was just so expensive. And they were saying it was coming down, but the prices were going up. So it's just, but that's why they say the Fed's primary, or just say the Fed's favorite measure of inflation is PCE data, because that one breaks all of the categories down and like in food and auto, different sectors and just different parts. It's broken apart more in the PCE data. So that's absolutely true. So it's kind of crazy. But the thing is, the market reacts, because this is what the market do. Everything is about sentiment. And so if CPI comes in lower again in the short term, that gives us the illusion to play around, well, the Fed, that means they're anticipating when the Fed when they meet again for another decision, that the Fed will likely pause or skip or just stop rate hikes altogether. You know what I mean? So that just be the thing. And it's all funny. It's all like in just short term market sentiment, right? Just and it's all just smoke and mirrors to me, man. I don't want to get political with it, but it's crazy. When we last, was it on Friday, we got the non-farm payroll data that came out, and it was alarming to me because they revised the data from June, and it was like they revised it up 200K. So they revised it down 200K because it was just like, I don't see how you can miss if because the non-farm payroll data just measures the average payroll and pay in the United States and stuff like that. And the fact that the pay was increasing, it was bad for the Fed, because the Fed looking for the economy to slow down, and the pay was getting higher and stuff like that. But they revised that number down. They revised it down a few times, where the market would have ran in June when that data came out, but it didn't, because I'm sorry, I just don't think that you can miss 200K. You can miss 50K, but how do you miss 200K? You know, so, but if they were to audit the data, oh, well, they passed the audit because the next month they revised the data and gave us the 200K for the last month, and just said, well, we fixed June's data and we fixed July's data. So it's weird how that happens, man. So but I only mention that because the short-term sentiment that we get from stuff like that, it moves the market. So right now, the last non-farm payroll data that we got, it showed a slowing in growth, right? And that made the market run. But next month they may come back and revise that data, but whatever they needed the market to do in the short term, that data revision at that time, or whatever numbers they released to the public at that time was good. You know, it just kind of fed into whatever that narrative is. I hate to be cynical, man, but that's how I feel about this. But yeah, so yeah, but no, that was a good observation, Isaac, because it's all lagging. All of that stuff is lagging. Now, so as far as this point of maximum financial risk, where would you all say that we are? If anyone want to take a stab at it.
Say anxiety.
Okay.
You know, anxiety to denial range in that area.
Okay.
And beat me to it. I was going to say anxiety as well.
Okay, anxiety. All right. Anxiety. Yeah. Yeah, I mean, I guess we could be there. Yeah, I'm not sure. Yeah, anxiety probably is the best place, because I don't really think we started to really do anything yet. Yeah, I think we're there probably. Yeah, it looks good.
Like we still in that range, just got a big pullback, but it's still holding some areas. I speak on it to be specific for me, and yeah.
Yeah, I agree with that, because we're not in denial yet.
Right.
Not yet. Now, let me move on. So, all right. So the UPS situation, man, this is an interesting one. So UPS got earnings on Tuesday. I believe it's before the open. Yeah, I think it's before the open. And so I know you guys heard about the news that's been going on with UPS. Well, obviously I got the headline up here now, but the UPS full-time workers are now getting paid $100K a year on average. So the tentative agreement ensures full-time UPS Teamsters remain the highest paid delivery drivers in the industry, topping out at an average of $49 per hour by 2027. This amounts to an average of 18% hourly wage increase for full-timers over a lifetime of the contract, over the lifetime of the contract. So the thing about this is, obviously this won't impact the current earnings, but it could affect the forward guidance, right? Now, but everyone's, and again, don't get me wrong about this. I'm glad they're getting paid, because I feel like we after COVID happened, man, it showed us how important all of the components were to the economy, the different sectors that we paid no attention to, you know. So it's certain things that you can't play around with. Like, for example, we order a lot of things from UPS. A lot of people would rather order from UPS than to send things through the US Postal Service, you know, because they feel like it's more reliable, and you expect them for things to get there. They're a very important part of the economy, a very important part of the whole ecosystem, right? They're very important. So I agree with the concept of them getting paid. So now that that's out of the way, we have to consider who's going to pay for this now. Who's going to pay for the raise? It's going to be us. They're going to raise prices of delivery services. That's what's going to happen. So, but yeah, so they're going to work that in there. But yeah, so we'll see how that balances out. But so, yeah, but that's good. That's good for them. But as far as the earnings go on Tuesday, I have a chart, and I'm going to go to the chart quickly before we get into SPY and anything else. Let me go to this UPS chart. All right. So I have Tesla up here, but let me just go to UPS since we're here. So this is the UPS daily chart, man. Very interesting chart. We got the 50. So we already got a golden cross on here because we crossed the SMA, but the 50 is about to cross the EMA, the 200 EMA, you know, and so this is a bullish stock, man. Everything about it is bullish. It's been running for a while. It came up here, tested this area. So it's right here in a key area here. Now look, it has a little room down to this 200 SMA. It has this 200 moving average. It has room to the 200 moving average. What is that, about a dollar move that it can make down here? That's cool. It's in a nice range. Now, again, they have earnings on Tuesday. This looked like it's set up nicely, man. I like everything about the chart. I think it just looks really good. Now, I don't know how the news is going to affect the stock. I don't know, you know, when the market opens, I don't know how it's going to affect it now, but you see how it held when the market fell. Man, the market fell yesterday, and I think that held relatively well, considering everything that's going on in the market. So they're right now they're pricing in a $10 move for UPS. So we'll see how that plays out tomorrow. I'm sorry, on Tuesday. But the thing is, I like stocks like this. This could be a nice, it's hard to call it a run-up play when they got earnings Tuesday morning, but obviously this would be an after earnings play. Either way, it's going to be a nice one. Now, one thing, well, for a while, UPS used to be one of those stocks that would move a lot for earnings, but lately it's been moving a lot for earnings, but it's been opening within the expected move, and so that's obviously not a good thing if you trade earnings. So I think it'll be a great after earnings play, and possibly a trade idea, possibly a good trade for tomorrow if it can break out. Because the thing is, if it bounces off of this area here, then you obviously could it will be over 182.60. It'll be a nice trade idea for tomorrow. And but it's the key level on this right now is that 184, this area here. You see prices kind of, this area has acted as support and resistance. This 184.65 area is a key area. So if we can break through there, so that would be our price target. I'm not necessarily looking for it to break through here tomorrow, but if it was to get above 182.60, then the target would be the 184.60. So, you know, just that would be the price target. Just get out right there. I mean, and that would be a nice move for a UPS trade. On the flip side, puts, so instead of trading it, if it was to lose 180, 180.47, I would only trade puts on it if it was to lose this 175, let's say 175.50. If it lose 175.50, then I would play puts. Otherwise, it's not worth it playing puts right now. So yeah, that would be a good one. Good. I like the way it's setting up. And this is the weekly here. So it's still in this zone here where it could literally just bounce, just look like it would probably bounce off this area here. So yeah, I like the way it's set up. I love the news on it. And then it got earnings. So it's a lot of catalysts for UPS, man. So let's see how it plays out. I mean, because it can get really ugly if it comes down. If it loses this area, that'd be a good put trade, a really good put trade, because it's going to come down. It's going to come down quite a bit. If it was to miss that, it would come all the way down here to like 175.88 or something like that would be our first target if it was to lose that level there. So yeah, that's how I would play it. But yeah, I like UPS. I think it looks great here. Now, let me get back over here for a second. We'll get to the other charts. All right, what's up with SPY, man? So we had a bearish engulfing on the daily on Friday for SPY. And let me go back. I'm gonna use this one. So SPY, man, we had that crazy bearish engulfing on here on the daily, and we had a bearish engulfing on the weekly too. So we got time frame continuity on this one. And so this is what I'm looking at, man, for SPY. If it loses, well, we already under 446, I'm sorry, 447, but let's just say, you know, in the market, it kind of like sometimes we get a little pump in the morning or whatever. If it lose 447, so we already under 447, but let's just say if it lose like 44, if it loses this under anything under 447, so let's just say 4465 or whatever, you can take that down to 444. I doubt that it loses this key area down here, and then you can buy calls at 444 if it bounces off this key zone right here. This is a solid key zone right here, and so we should bounce here. So that's what I'm looking for, to bounce off of 444, get calls off that bounce, but it has to bounce and sustain that bounce. We'll be able to see that based off of, you know, just the early price action from this. So that'll give us indication on how we should play that, if that makes sense. So that's what I'm looking for there on SPY. Now, 1 second. Let me just check out something else here. Let's see the month, just to look at it, because the month just started. Yeah, still inside on the month. Still inside on the month. I just wanted to take a look at it. That was an ugly flush. Now, sometimes with flushes like this, man, I mean, because Apple was a big part of that flush, man. Apple had a earnings wasn't as strong as expected. So, you know, it caused that. But yeah, man, this is bearish, man. We got time frame continuity. I'm just looking for, again, let's see if it holds this area, because we got a few other setups that if SPY was to move down, because again, it may not, just because we got tech that's bearish and in a lot of sectors that were bearish, we saw consumer discretionary still finish green, and most likely energy is going to probably flip again. So it's going to be other sectors that can push or hold SPY from losing these areas, or they just may defend this area, right? But if it was to lose this area, there are a few other stocks that have some really solid put setups on them that we're going to talk about. Does anybody have any questions about SPY? Cool. Let me. What's up, Katie?
I don't have a question, but I was kind of watching that level too, but like really it holds market structure at 443.70 to 444. So it could really bounce here. And I'm also seeing that for QQQ around like 372.85.
Okay.
So these are some key areas for bounce to resume up, because even now they're both still in the uptrend,
Right.
but they just need to hold those areas. So yeah.
No, appreciate that. Appreciate that. Appreciate that. And but yeah, but if it was to lose this area, man, then we come all the way down here to this 50, man. We come down here to this 4.445 area. I mean, obviously there are other we would already be in a gap fill. If that would probably, the first price target would be down at this 4.425. But I would automatically just give that up and just say my price target would be the 50 if it was to happen. But I don't think it loses this area. I think they defend the hell out of 4.44 because that was a healthy sell-off. We needed it. And I knew that I didn't know, because we don't know anything in the market, but I felt like Apple would be the catalyst for that sell-off. And that's what we got. Yeah, Apple was a good trade on Friday too. But so yeah, I got a few stocks. Let me just make sure that there isn't any slide that I'm missing before. Yes, I'm gonna move to the yeah, so we had chart setups. That's the next slide anyway. So good. All right. So I got a few good ones for y'all, man. So right now, so Cheesecake Factory, this is a really good chart, man. We haven't played cake in a while in here, but we played it a few times. We've had a few successful trades off of this. So, we only watch it when it's setting up, when it's got a good setup. So look, the thing is, so it got a golden cross on this also, and look at how it held when the market sold off on Friday, right? So market sold off on Friday, and we got cake holding up like this, man. Then I want you to also pay attention to a few things. So the thing is, I like this as a nice swing trade, man. I like it as a swing trade. And they had a good earnings last week. Well, yeah, last week. And just look at how high it went. So the high was the 38.19 price level. So we can break back above. So if we can break above, was 36.94. I would just say here, because this is I drew a key level line here at 37. Let's call this 37.10 or whatever. We break above 37.10, then we can take out that 38. I like it as a swing trade. If the market holds up, I like it as a swing trade. A nice swing trade on this one. I'm gonna post the chart setup with the option in the chat, because I like this as a nice swing trade. I think it'll be a good one. And just look at the weekly, man. It's setting up pretty nicely. I just like the way it held. I like the way it held. So there's a lot of strength in it, and I love that bounce off the 50. It was a substantial bounce off the 50. So we got a few bounces off of that. And I just like the fact that we got the golden cross, a double golden cross right there. So that's a good one, really good one. So NIO, another golden cross here. So NIO, and so you see it still held this area here after and it finished with a 2 up, although it's not enforced. And on the weekly also, I like the way, hold on one second. This is the weekly chart right here. So if we can break above that 1618, 1620, we can extend to 1687 and 1840. But if it was to lose, if it was to take out and again, we finished fairly close to the low on the day on Friday, but it still found a way to close inside. It loses 1472. We can retest the, what is that, 1546 price level. But yeah, it's a lot of flow that went into NIO. And yeah, and then we got, so I think is it Li Auto that has earnings, or XPEV? I think it's Li Auto that has earnings this week. And so yeah, Li Auto has earnings this Friday, the 8th. The 8th is Wednesday, I believe. Yeah, I believe the 8th is Wednesday. So Li Auto has earnings. So that's another stock that could be a catalyst for NIO. But just you can't ignore stocks that have a lot of flow like this, man, just coming into them. And then on another point, the most important reason why this was on my watch list is because NEO def crossed in December of 2021. So that's when the 50 EMA crossed below the 200 EMA. Let me show you real quick. So it def crossed back in December of 2021. So a long, long time ago, it def crossed here. That's when we got the def cross, and it's died. So we never, ever got a real resurgence until now. We got a golden cross. That 50 crossed over the 50 EMA crossed above the 200 moving average, but it's going towards, it's looking for that 200 EMA right now. So that's why it's on my radar. And if you look at the NEO chart, man, that was a solid breakout, a wedge break. And so it has some momentum too. I mean, obviously slowed down because of the market, but just definitely something to be on watch. And yeah, so just something to keep on watch. Good one. Now, where we are we? Just trying to stick to my charts, my schedule. We have, all right, so I'll go over here to Tesla. Tesla. All right, so this is Tesla on the daily, man. Still interesting setup, man. I feel like as long as Tesla holds this 50 EMA, which is also at the 250 price level, I think it's fine. If it loses it, we close that gap down to 234. So let's call it 235. We close that gap down there. That's a nice move if it was to do so. On the call side, man, to be honest, you just got to be careful with Tesla. I really need Tesla. I wouldn't play personally unless you're just doing a quick trade. I like Tesla over like 170. I mean, 270. I need it back over 270 or something like that first, but because that'll give me just yeah, I like Tesla over 270. Obviously, Tesla is a mover though. You know, you can play it. If we can get a short trade, you can get a trade over 265, then you could take that trade up to 270. You know what I mean? Like that would be a cool trade. But I just feel that to get some real momentum, you don't want to get chopped up trying to play Tesla. So I would wait until it give us a strong uptrend. It's been trying, but it hasn't been able to really hold. And the fact that it broke out of here. Now, this is something important I want y'all to pay attention to here too. You see how we got this wedge break here, but we didn't get the candle confirmation. Price broke back down there. So that was a head fake. So if anyone who prematurely just, you know, I'm going to go ahead and do this because Tesla broke out of here, you got head faked. Candle closed below the wedge break, right? So yeah, fake breakout. But yeah, so this is I got my line drawn here on this key area here. And so that 257, so let's just call it 257.50 is a key area. We lost that area. So let's see if it holds 250. It's not really looking good, but Tesla is a little different. So we just got to see if the news and the market plays in its favor. But otherwise, I'm looking for a nice short trade on this if we lose 250. So keep that one on. That'll be a nice trade to play. Now, since we talk about short trades, let's go ahead and just hit a few others. And again, remember I showed y'all the SPY chart. So if SPY was to keep that move on down, then a lot of stocks could open up and fall down. Now, look, so Meta has an interesting chart, and personally, it looks like every chart tells a story, man. And if I was just looking at this just off of the way the story is telling, it's actually saying a few things. The Meta chart is saying a few things here. First thing I see is, okay, it's been holding that the earnings gap. It's been holding that earnings gap up, and it's been using it as the top of it or that area as support. So, and we didn't finish inside, but it finished 2 up, but it wasn't enforced. So we had a 222 reversal there, but it's holding. It did not take out Thursday's lows. It's still holding above that. But if Meta if it loses Thursday's lows, I'll just say that if it takes out that level, man, I just feel like it's going to close this gap all the way down to that level down here, that 301 price level. Was that 301 like 70 or whatever? It come down here and close this gap. But if you also look at this, it plays out. It would play out perfectly if it did that, because that would be the bottom of the downtrend too. It would just I'm sorry, the uptrend. It still would, it would sustain and respect the uptrend. It could close the gap and still do that. You know what I mean? So that could play out, but you just got to pay attention, because it's obviously it could have gone a lot worse, because when the market was coming down, it still held up relatively well. And because a lot of people are looking at every opportunity to buy Meta on a dip because of how great the earnings was and how great the guidance was. So yeah, so it's still holding support, but at the same time, if you're looking at it, it's got a lot going on with this chart that SPY would help influence. But yeah, so it could come back down here, and this would be a nice area to buy too. So yeah, so just looking for that to play out, man. So I say this for Meta, man. If we can get above 318.50, then this could take a move back above. It can take, I think if we take out 318.50, we can get back up there to 326. So I'm just going to say 325, right? So that'd be a nice move on the stock. I'll mark this up, obviously, but that's just what I would do. I mean, I look at it like up in there somewhere if we was to do that. But another thing, so tomorrow morning, man, because y'all know how I feel about Mondays. The only way I typically trade on Mondays is if we swung trades, or there's just some setup that I can't refuse or whatever, one of my stocks breaking out or whatever, then we trade on Mondays. But typically, you know how I feel about Mondays. Mondays are indecision days, and the first 15 minutes of the market are used for profit taking. So it's gonna be a lot of people taking profits for the first 15 minutes of the market, right? So, but on Monday, they double that. So instead of it being 15 minutes, it'd be 30 minutes. So then you won't really get the direction the market is going to go until after that 30 minutes is up. So where it normally would be a 15-minute possibly move before you kind of get that crazy volatility out the way and the market starts to stabilize a little bit, it takes a little bit longer on Monday. So just keep that in mind when trying to trade, because if the market, sometimes we get that pump fake before it breaks down. So it all depends on what the sentiment is overnight. Let's see how the futures open tonight and go from there. They could use that as an opportunity to buy the dip, or if they start selling off, then that kind of gives us an early warning of what could possibly happen when our market's open too. So yeah, so keep an eye on that. But yeah, but if Meta loses, I say if Meta loses that 309.90, let's just call it 309.90, then we close that gap all the way down to 300.17. That's a nice move. That's a nice move. So I'm gonna be watching that one closely as a possible trade. Now, I'll hit Amazon. That was a great trade on Friday, by the way. Now, Amazon got legs, man. I feel like Amazon got legs, man. So this is the thing with Amazon. I like 150 for Amazon as a swing trade, a longer swing trade, but that's a longer swing trade. But in the meantime, you see, it took a while for Amazon to start to even start to pull back on Friday. And that was when Apple kind of just gave up, when they just finally just sold it off and it just started dropping and everything else just kind of gave up. But Amazon still held up relatively well. If you look at this now on the daily chart, you're just looking at this and a vacuum, it look like, well, man, we got this like a bearish pin bar, or kind of like an inverse hammer on this, right? But if you look over here at the weekly chart, it finished strong on the weekly. We closed above that gap, and it looked like it definitely wants a continuation. If the market, plays nice, then we can get I feel like my next price target for Amazon would be if we could, you know, obviously if we're going to play it like that, then if it takes out 143.6, then we go to 143.6, then we can extend to 146. I'm sorry, 143.6. We can extend to 146.5. Man, that was hard to say. So, and then from there, move up to 150. But the thing is, man, like I said, it's gonna be a lot on what SPY does, because when people, it's all about fear in this market. So if the broader market starts to sell off, as much as you want to be bullish on certain stocks and saying, well, man, I'm buying the dip. I got diamond hands. Sometimes the people, they get a little freaked out and they start selling. So just keep that in mind. But Amazon had a great earnings, man. And that was what I was expecting for it to happen for Amazon for that to happen for Amazon. Now, I do want to touch on a few things, because since we're talking about Amazon, so on Thursday, hold up, Amazon had earnings on Thursday. Yeah, so on Wednesday, heading into Thursday, was it Wednesday heading into Thursday? Yeah, so we swung Meta calls and Amazon calls into Thursday, because, well, the Amazon calls were purchased because Amazon had earnings coming up. The 140, was it 140, 143 calls, I believe. 143 call. Yeah, I think it was the 143 calls or something like that. And yeah, so they were swung into Thursday because Amazon had earnings Thursday night, and you know, the IV pump, and just I just felt like it was going to run into earnings. The plan was to sell those plays before earnings, because it would have gotten to its target where it was headed before then. And that's just what my plan was, right? But on the pre-market on Thursday, man, the market just wasn't looking good, man. It just it sold off in the futures the night before. And so I just let the team know, man, just go ahead and cut both of those trades at market open, because I didn't want to risk. I mean, I was still bullish on those stocks, but I just was my mind wasn't into, I wasn't confident about the market. That's the key word, confidence, right? I wasn't confident about what the market was doing. And just one thing that I'm gonna tell y'all for sure, and hopefully that kind of solidified it. If I'm not sure what the market is gonna do, or I don't think I got a grip on what the market is gonna do, I'm not gonna blindly lead y'all, because it's real money. It's real money. Some people, even though you tell them not to, some people are gonna trade with their, you know, their last or their life savings or whatever. So I have to take all of that into account. So if I don't feel good about it, I don't care. I'd rather just say, look, it's not a pride or ego thing with me with options trading. It's about, I want to live to trade another day. So if I don't like the way this trade, look, I'm gonna tell you to get out of it. Simple as that, because I always look at it like this. If you pay $100 to get into a trade and it goes down 25%, you know, you got $75 left, and I'm gonna put you in a $50 trade that's probably going to go up 200%. So don't worry about the $25. Get out so you could, you know what I mean? But then also on top of that, you know, the bigger part of that is not trading more than 20% of your total available cash to trade, because if you die, which you will sometimes, you will have 4 more lives left, right? That's another key thing too that's important. So, and it also takes the stress out of it. It removes the stress that you have when you're in, because you're too vested, you're too emotionally engulfed into the whole situation. If you got too much on the line, you know what I mean? You can't, there's no way to cut it and say you're not attached to it. I'm just telling you from personal experience. So that's something that I just wanted to kind of to hit on. And then I want to also point on something else, because some people didn't understand one thing, and I just said I would talk about it today. So there was, so you know, the market was weird last week, man. We had a weird market. It would close one way, and then something would happen overnight. And we had so it was one day last week we got the credit rating got we lost our AAA credit rating and we went to a AA plus, right? So they lowered our credit rating, and the market just died in the Asian futures. We we had calls that day. We had Meta calls that day, and those calls got clapped, right? So the plan was, what strike was it? Was the 120, yeah, the 120, I think it was the 130s. It was, I'm sorry, the 330 calls that we had, right? So, and we talk about this a lot. I like to play defense sometimes. Now, sometimes we talk about averaging down a lot, but I always say you only average down when it's the right thing to do. And you got to understand the context of what you're doing when you're averaging down. So I wanted to make sure I pointed this out again, especially since y'all went through it now and y'all understand. So, you know, Meta, the whole stock, you know, the market dropped or whatever. So, but Meta still was holding key levels. And since Meta was still holding key levels at the end of that trading day, I called out, I said, I'm going to grab some Meta calls still. But I also called out. So what I did, I called out the 325 Meta calls, but I also recalled out the 330. But I'll post it in the chat. That 330, me calling that out was to average down. So if you were in that trade already, that was an average down. So I'll give you an example. I know we talked about this, but just a quick example that if you paid 200 for Meta call or whatever, and let's just say overnight, because you can't control what happens overnight. You can control your risk while the market is open, but if you got to hold overnight, you can't control what's going to happen. So let's say that trade dropped 50% overnight down to $100. So now you're like, I'm down 50% on this trade. It's only worth $100 now. So if we average down on that trade now, because I believe that it can bounce up or whatever, then we buy another call right now. So what I did was I waited till the end of the day, that following day, called out the same Meta call for a fraction of the price, or, you know, for less than, for half of that price or whatever, just so that, because I felt like that trade was going to come back enough for, if anybody was in that trade and took a loss, they can get their money back. You know what I mean? So that's what the trade did. So that was the reason for me calling out, because some people was like, well, why you call out the Meta 330 and the 325? I'm like, because the 330 was an average down. And if I had just called out the 325, some people would have probably just not really understood, you know, what was going on. So, and I know we had just talked about it the Sunday before in the study group. So I just wanted to kind of just to revisit it, just so you guys know, sometimes it's not about getting back in that trade and trying to get rich off that trade. Sometimes it's about being able to cover yourself and get that money back, like but you only do that when you feel like the stock has some legs where it can actually go. Like, for example, there are situations, if I'm trading a bull flag and we get a lot of volume on a bull flag, and I see that it could actually, there's like, you know, I don't have a bull flag right now that I can show you, but the whole point is like, I like trading bull flags. And if you're trading one at market open and this has a nice setup on it, and we have a nice price target on it, I'm like, okay, well, I'll just use this as an example here. Like, this would be like a double bottom here. So we got this double bottom here on this chart. So if, one second, what could I use? It doesn't matter, I'll use this. So we got this double bottom here. So, you know, we expect the double bottoms to you know, shit, that's why I didn't use it. But look, so we got a double bottom there, right? So, and things play out the way they should play out, or the way you want them to play out, you get that bounce off of this. And let's just say my target would be here, right? So if that's my target, I'm like, that should be enough. If I was down on a trade 50% or whatever, and I average down, it's enough. Like, this is where my resistance would be at, right here. So I'm like, okay, that should be enough for me to get my money back. See, because like, think about it like this. Let's say the original trade was up here and it lost this level. So now you're down 50%. Just using this as a hypothetical situation. I'm not looking for price to get back above here and now me to still get rich. I'm like, okay, damn, I'm down on this trade. This flush happened really quickly on this candle. It just like, this was a institutional candle right here that sold off quickly. You know, you down on a trade. You're like, okay, but I'm not dead. Now, do I just cut this here? Yeah, you can cut that there and that'd be fine. Or you can get all of your money back by just getting out right here if you average down on a trade. Because if the thing is, if it comes back up here, you know, it's a possibility you don't get all of your money back. You probably get like a fraction of it back, because a lot of things change with the Greeks once the trade comes down here. Now everything about it, the IV, everything changes. But if I bought that trade here and it gets back up here, I may have gotten all of my money back now. You know what I'm saying? And now I'm out of the trade because my setup failed. It did not work out the way I wanted it to. Now, this isn't always the situation. There are other situations where you just, if you didn't take a huge loss and it was just something small, you were able to control it. Now I'm using this as an example because we swung that trade and you were down a substantial amount where you couldn't manage that trade. You couldn't set a stop loss or anything that would have sold overnight for you. You know what I'm saying? So my plan now would be just to get my money back and get out of this trade now. And like I said, sometimes there isn't a situation where you can get your money back. There isn't no setup. You just want to cut that trade and just move on, you know? So, but Meta was holding key levels, and that was an important thing to point out, that it was holding key levels and that we needed not cut that trade. And I made sure I let the team know that, you know, whenever it hit those key levels, that was the thing to do. Right. So, so yeah, but and look, some of this stuff is going to be foreign still to you because it's going to take a while for you to be able to, you can learn all of this stuff. You can read, you can blow through every single section of every piece of training just to check those boxes and say you read it. But that doesn't mean anything until you apply the stuff, man. So you got to apply the smaller stuff first and build upon those things as you move along. But yeah, so I just wanted to kind of cover that. And I know KK is on here and she used that tactic a lot, and you know, with regards to averaging down to get her money back. And now let me go about my business. So now I absorbed whatever that loss was and got my money back and got up out of there. But you know, you got to be able to read the situation now. And I just want to say this again too, because I just want to make sure if a trade, if I call out a trade, right, and that trade goes above 30% profit, you know, that's I'm in my mind, I'm expecting for any trader who's not sure how to read price action or how to read market structure to take that profit. That's a substantial profit. You know, 30% is a substantial profit. You want to take your profit, or you can ask questions, you know, and that'll be a good thing to do. Just ask questions. If for some reason you feel like it can go further and you didn't take your profit or you don't want to, you know, then you could do that. But yeah, so but that's just something I wanted to point out. But on the flip, but if the trade never goes profitable, I'm gonna let you know when to cut that trade. I'm gonna let you know, like, if now there are situations where I may have alerted the trade and the team knows that I'm not around that day or something like that, then of course you got your risk management parameters in place, like okay, take profit. I'm sorry, you have to realize now everybody has their own risk management parameters in place, or you should only trade where you're comfortable. So I know I say if you don't know how to read charts, if you don't know how to swim, don't go deeper than 3 feet, 30 feet. Even if you do know how to swim, some people aren't comfortable swimming in water that they can't stand up in. So if I'm 6 foot, you know, I don't want to, if I'm 6'2", if I don't want to stand in no water, I don't want to swim in no water where if I can't stand up in it, then I don't care how good of a swimmer you are. I'm not letting you take me out there. You know what I'm saying? I'm gonna stick to where I'm safe, where I can, you know, be an asset to you, because I can't be an asset to you if I'm afraid. And I can't, you know, I'm not going to think clearly if I'm afraid, even if you taught me all of these little things that you taught me to swim. If I'm afraid, I'm not going to remember those things. So I want to swim somewhere where I'm comfortable first, and then I can slowly move up those ranks and learn those things. So the same thing with trading. It's like if you're in a trade, now I'm keep using Meta as an example. If you're in a Meta trade and that price starts to break down, and you also got to look at the totality of the situation. If the trade costs $400 to get in the trade, then 25% is $100. And me personally, on a Meta trade, I'm leaving at least a 25-30% margin on that trade, I'm willing to lose 25-30% on the meta trade. And depending on how much time is on that trade and what type of setup is and what the reward is, I may be willing to lose even more. It all depends on the setup though. But that's why you have to, I urge everyone, before blindly jumping in any trade that I call out, I want everyone should do this first, man. Look at the chart first. So you can say, oh, he called that out because it was a bull flag. Oh, he called that because it bounced off of VWAP. Oh, he called that because it bounced off a key level. Oh, he called that because it just broke resistance, or it just took out the trigger for calls. You should know what it is that made me call that trade up, because it may be one of those setups that you don't like. You know what I'm saying? It may be one of those 6 foot water trades. And like, no, I ain't going in 6 foot water. So I'm not even going to set myself up to be uncomfortable in this trade and then start and get in panic and sell early. So every single trade isn't for every level of trader. So I just want everybody that's another key thing. Some trades aren't going to be for you. You know what I mean? Because you're not going to be able to if you can't manage the position, especially if it's a swing trade, I wouldn't take the trade, because in my mind, me personally, obviously, I'm not calling out any trade that if I swing a trade, if I call out a swing at the end of the day, it's because I'm expecting either a gap up or a gap down. If I think that it's a possibility or a strong possibility that it's going to open up where in the area of where we closed, then it's no point in me swinging it, because that's going to be one less day on that call, on the call option or put. So because the theta is going to be realized overnight. So if it has a $50 negative 50 theta decay on that contract, the next day that $50 is going to be deducted when the market opens. So why would I want to swing that unless I'm expecting it to move up or down substantially before the market opens the next day? Otherwise, I'm just losing money. So that's the whole point. So that's my thought process whenever I swing. So on days where I don't swing, it's because either I didn't know what the market was going to do, I wasn't sure, or I just didn't feel like it was going to move enough where it would be worth it, So because if you just think you got to be in a trade, then you got to really ask yourself, are you gambling or not? Because that sounds like gambling, So, but sometimes you're going to get it wrong, even if everything works in your favor. Like what happened on Friday when the market just died. I mean, I saw when the market was died, and I was also expecting the market to come down because I had an Apple put trade that I was expecting to play out at some point, and it played out a lot sooner than I thought it was, but it played out. And but yeah, you just gotta be able to watch the situation in totality and decide whether or not that's something for you. And but yeah, those are the things that you want to ask yourself. But yeah, sometimes just wait for the next trade. And one last thing, if you're new or just starting out, right? So this is my philosophy. I'm like, if you're just starting out, get used to getting into some of the call outs. You know what I mean? Some of the call outs, right? And if and sometimes being on Zoom make it a little bit more comfortable, because most of the time we're on there foxing those trades together. And I'm saying, okay, well, when it hit this level, we're going to see if it closes above this particular level. Let's wait for the retest. And then so I'm kind of coaching or we're talking about it in real time. And sometimes it's a few of us, sometimes it's just me. And we're kind of waiting for something to happen. So it kind of makes it a lot easier. But even if you're not, those are still the ones that you probably should take. The chart alerts, meaning when I just post the trade ideas or whatever, and the chart alerts or the watch list channel, sometimes like those, you have to know how to really read charts and analyze the data to take those trades. Because just because, if just because it takes out the trigger for calls doesn't mean you should buy it. You know what I mean? Like, you have to also ask yourself, how long am I planning on holding this trade? Okay, so let me go. So after it takes out the trigger, now you're looking for a setup on a lower time frame. So that's going to fit your trade, whatever trade that you're looking for. So if just because price takes out the trigger doesn't necessarily mean that it's time to take that trade. CRM. Like, I'll use this one as an example here. So let me go back. here. So just real quick, and then I'm gonna let y'all go. So look, this was a CRM trade. This was a crazy trade. It ended up gapping down when the market, but for a while, CRM was holding this level. Okay, so now we got another trade on CRM right now. But look, so CRM was holding this level for a while. I was bullish on this trade. I was thinking that CRM was going to break out of this wedge because that's what it did before, you know, like had a good, we had a few of them here if you look at the weekly too. So we got the crazy gap up and it was set up to do that again. But, you know, the market conditions did what they did. It came down to lost the 50 EMA here. And then it lost the 50 EMA. So not only did we get a 222 reversal, it lost this trend. It came down, it closed the whole gap, lost the 50 and gave us a bearish engulfing candle on Friday. But this is a key level right here. This is a nice key level. So it could bounce from here, but if it loses this, it's going to die. We got a long way down if it loses this. So this would be a nice trade if it does lose that, but it could bounce here too. But I was using this as an example because because you got to think about if it's worth it or not too. Because like I said, it goes back to gambling. If it's only going to be a $1 move. Now, if it's a stock that's only worth like $20, $30, a $1 move is substantial, you know, get a 5-10% move on a stock. I mean, that's a good options move. But you got to think every trade idea, sometimes you just miss the trade. Let's say I just called out a good trade, you missed it. So you're waiting for you're fishing for something. Just chill out. Just chill out. Save that money for the next trade because I don't want to hear, oh, well, I can't, that trade was too expensive for me. No, it wasn't. You know, just stop trading everything. You got to wait sometimes. Wait for the best setups and the best trades. Or sometimes you got to manage a certain position. There are certain trades where you're going to manage those positions and you're going to have to manage those positions. So, but yeah, so just because something takes out a trigger for calls or trigger for puts, that doesn't mean buy it. You got to wait for that candle confirmation. And then you also find a setup on a lower time frame based on how long you're planning on holding the play. So look at the trade like the beach, right? So I gave y'all a beach setup. Like I'm saying on Friday, the beach is going to open. If it takes out this level right here, then that means that the beach is open. If it loses this level, that means the beach is closed. So you see, okay, well, it took out this level. That means the beach is open. I'm going to the beach. So what you want to do now is you want to go look at whatever time frame that's going to help you see whether it's going to rain when you get there or not. So if you're going to the beach on today, this afternoon, hold up, what time is it now? So 3 o'clock, you're going to the beach at 5 p.m. You're not going to look at the weekly chart to see if it's going to rain by the time you get to the beach. And you're not going to use the 5-minute either. You know, you're going to probably use the hourly because that's going to give you a clearer indication, more of a solid grasp of or reading of what the weather is going to be by the time you get to the beach. You know what I'm saying? So the same thing with the charts. You can't just, the setup is on the daily, but that could be good for a swing trade depending on what the setup is. But you have to find a setup on the time frame in which you're planning on trading it. So if you know that you're only trading it you're only planning on trading it for 5 minutes, or you know you at work and you only got 30 minutes of free time, so then you should be looking for a setup on the 5-minute. And if you don't see one, then okay, well then you don't trade right now. You know what I'm saying? So it's different setups for different people. So I honestly recommend staying away from them chart alerts. And especially if you haven't mastered taking, you know, just the call outs. So I'll say, when I say master taking the call outs, meaning I call out a trade and you haven't mastered being able to take those successfully, looking at the chart and understanding, okay, well, this is where support is. Let me get in right here. Let me do this. If you haven't mastered that yet, I would just hold off on doing the chart alert ones until after you've done that. And plus it also puts what it does also is I like having something to aspire towards, man. I like challenges. So if I know, okay, well, I'm only on level 1 because I haven't been able to take more than 5 or 6 of his trades without being scared out of the trade, or I jumped in too early. I jumped in too late, or I missed the trade and I still did this. So I'm still making these mistakes, or one little small retest and it didn't even lose the structure and I got scared out of the trade. So these are things because trading is 90% mental and you're trading your personality. I tell you this all the time. So if I haven't mastered those things yet, right, then that means I'm not ready to move on to the next level. So only my ego would make me move on to the next level. That means I'm putting a cheat code in and I'm just skipping the next level. I'm skipping to the next level because a trade isn't coming fast enough for me. And I know just because you're doing it, I can do it, or because everybody else doing it, I can do it. No, they just you're going to lose your money like that. And it's not going to be fun. And I know everybody, obviously it's going to take money. It's going to take to lose money in order to make money, but you don't have to, but why? But this is the thing. Yeah, you have to lose money to make money, right? And yeah, you're going to have to lose money to get comfortable and get that, to get the mental toughness that you need to be able to be a options trader. But you have to have focus too. You can't just use parts of the things. Like I know some people say, well, profit is profit. I hate that. You know what I mean? Or yeah, those little sayings, they're okay, but they got context to them too, you know? It's just like sometimes you just got to realize, well, yeah, I shouldn't have taken that trade. And I want to analyze why I took that trade, why that, we don't analyze our wins like that. We only analyze our losses, because that's where the win, that's how we can learn how to win, because the losses are the levels of difficulty that we have. Getting through those levels of difficulty is what takes us to the next level, not analyzing our wins. I mean, the wins, we got that. So now you obviously want to get a rhythm going too and figure that out. But I'm just saying, just be careful with just being comfortable, just taking a bunch of losses and just shaking them off, because you don't want to face the fact that maybe you're losing because you're not following instructions. Maybe there's something small that you're missing, that if you just, because it happens a lot, man. You pull something out of a box and you say, I don't got to read these instructions, and you put it all together and it's working, but it's shaking a little bit, but it's like 3 pieces left. You don't know where they go either. But, now you gotta, we do this a lot, and then it end up being something that bites us later on. You can't keep doing that. Sometimes you got to look at those instructions, especially in options trading, because all of those little caveats that I put out there, they be there for a reason, especially because of these Greeks. It would be different if we were just trading stocks, but we're trading options that they expire. So we just got to be on point with that. And then if you got questions, look, because we changed a lot of things around in the group, man. Look, the group, and look, I take full responsibility for, how anything that happened in the group is a reflection of me. So, and now I'm owning that in totality. So we made a lot of changes, and we are continuing to make changes. And so if you got questions, ask questions, man. It's going to be somebody there that's going to answer your question. And if I see your question, I'm gonna answer your question. But especially about a trade, don't wait until the trade. Now, I will be upset if you wait until the trade is you up 20% on a trade, and then you wait until the trade is down 50% and ask, are we selling this trade down? Like, as soon as you want to get ahead of those situations. I may have dropped the ball and not have seen this. So you know what I mean? So let us know. Let us know, and let us know, because you may be bringing something to our attention that we may have lost sight of. And so, yeah, but man, that's all I have, man. I don't really have much else. I know I held y'all over by almost 15 minutes. I told myself we was going to be on time today, and man, so yeah, I will post those charts that we went over in the chat, and I got a few others. But yeah, man, enjoy y'all Sunday. Enjoy the rest of what's left to your Sunday, and I will see y'all later on, man. Have a good day.
So much.
Thank you. Have a good weekend.
Thank
Thanks,
you.
Antoine.
Appreciate
Antoine.
your time.
Thank
No
you.
problem.
Good one. See y'all.
Appreciate
All
y'all.
right, bro. Thank you. Enjoy your weekend.
All right, no problem. You too.
Enjoy your Sunday.
All right, Antoine. See you in the chat, bro.
All right. Oh, okay. All right. There you go, Peter. Okay. All right. I got you, bro. I got you. Okay. Okay. Matter of fact, I see Kwamir, Roman, Cy and Peter. None of y'all asked no questions, man. So I better see some wins from all of y'all this week, man. I better see wins from all of y'all this week, man. So I ain't had no questions. Y'all been kind of, yeah. So I need to see, I want to see some action from y'all, man. I want to see.
All right. I got you, bro. But I got one. I want you look at Disney because I just looked at
See, look, so look, but look, no, look. I'm gonna post a chart about Disney in the chat because Disney got earnings coming up this week, and that's one of my top ones. But see, look, I was going through all of the other chart setups, and I forgot about Disney, but I do got it to post in the chat though. So yeah, but now go ahead and ask your questions. I'm gonna answer it right now. But
so now I was just looking at the news about it, and between the lawsuit of this man falling off and
a lawsuit.
Yeah, it was. Yeah, I seen it was a lawsuit about somebody falling off a roller coaster in Disney World.
Damn.
And between them connecting with Hulu and with their subscription and everything. So I mean, I know a lot of stuff is going to be with earnings, but I still want to know, like, get your insight on it and see how the charts, how you feel about it for real.
Well, I'm bearish on their earnings, but you see, it still look after that breakout that it had, that breakout area that it broke out of that I had on here from the other week. It's still holding this level. So look, they could miss earnings and still move. And to check this out, because look, remember how Apple, they beat earnings, but their iPhone numbers were bad, or how Tesla beat earnings, but it still fell off a cliff because it ran so hard. Or even AMD, they beat earnings, but it still dropped after earnings because it just wasn't, they weren't impressed. It's like if I put all of this money into this because I was expecting, they hyped it up so much. So I'm expecting it to be the hype. And then I get there and it's not, people going to sell. So with Disney is still holding this key level that it's been holding since the beginning of COVID, right? So even if they miss earnings, I don't think it loses this level. I think Disney takes off from here. So that's the thing with Disney. So, and everybody's expecting Disney to miss, so they may have a surprise beat. I don't think that person falling off a roller coaster, first of all, I won't think it probably wasn't Disney's fault. And I'm sure insurance going to handle that, but I didn't see the news on that. I'm gonna have to check that out. But just looking at where Disney is and just how, like, I just feel like if it's sustaining this level right here, I think they're gonna, if they defended this level for COVID, then I think they're probably going to defend this level. Now, that's not an end all be all on this, but I just feel like if they defended this level on COVID, then it could defend it. I mean, this is the monthly. It could lose it and come all the way down here, but they would have to have a really bad earnings, man, or something for that to happen. I just think this is a key area where they would likely buy it up at. So I'm bullish on the stock if it unless it takes off hitting into earnings, because they got earnings on Thursday, I believe. So I think it's the 8th or the 9th. Let me just confirm.
It's the 9th.
Yeah, the 9th. So yeah, so they got earnings, man. But but I think Disney is in a perfect spot where, I mean, and they are. I just feel like, yeah, unless something crazy happens and we get, so before Thursday, a lot can happen before Thursday. They're only pricing in a $5 move on Disney. But when I say only, that's a big move. That's a big move for right now. But I also feel like this, for them to only be pricing in a $5 move on the stock, that if Disney stays down here and it doesn't leave this area here. So like I said, all of my comments are based off of if Disney stays down here, I think it can blow through that $5 move. You know what I'm saying? And yeah, and it could make that, it could be a nice move. But look, but the thing is, the thing about this, how I feel about earnings and how I feel about some of these stocks, man, either it has a run up or it has a move after. I don't like Disney for earnings. I just never like Disney for earnings because, again, it's one of those stocks where if they have a massive beat, if they have a good beat, but they guide down, because that's what I think. I think the guidance for Disney is still going to be bad because their numbers has been terrible lately. So even if they have a surprise beat, I think they guide down, and I still think it finds a way to trade in the middle for earnings. So, but I think, the move after earnings is what's going to be important. So either it runs up from Monday through until Thursday, because they report after the close. So that'd be a nice trade idea for a run up, because you see on the daily, it held this breakout area. That'd be a nice move. So either it does that or it just kind of it stays dormant until earnings, and then at that point go from there. But yeah, I like Disney. This is one of the charts that I actually had to discuss, but I actually have it lined up to post it in the chat though. So yeah, but that's
Definitely appreciate it.
all right, cool. All right, y'all. Well, again, I'll see y'all later, man. And yeah, my schedule was up to date because I mean, a few of y'all, man, I need to see y'all on my one-on-one schedule, man, because I need to look. I'm gonna tell y'all this though, real quick. Matter of fact, so all four of y'all, right? All four of y'all been in the group for all four of y'all been in the group for over a year. All four of y'all been there. Some of y'all for a little more than that, like a long time, right? So I need to see y'all on my leaderboard, man, and I just need to see y'all take training a little bit more seriously, man. All of y'all. So yeah, you don't want you guys said it, you guys start, I just want y'all to start putting a little bit more into this, man. So my schedule up to date, but I need y'all to be, if y'all book a one-on-one, I don't need y'all to book a one-on-one with I want to learn this, because that's not the way it should be. Like, let me do the one-on-one. Let me do the one-on-one, man. And because obviously I'm gonna unpack what y'all need to learn or whatever, but like I just feel like instead of just taking this money, man, and just throwing it in the market and just winning and consistently, man, I feel like y'all should be, I want y'all at a level where y'all could be on your own, and y'all got it in y'all for sure. And the fact that y'all still here and haven't given up after taking losses, because I know y'all take wins and losses, so it balances itself out, but it ain't to the point where it's profitable yet. Let's say you're taking a $200 loss here, but you're making $300. You taking a $400 loss here, but you made $600. You know what I mean? Or you took a $400 loss, but you made $400 back. So it's like it's still balancing itself out, but it's not really becoming profitable yet. So it's things that can be done to get y'all over those hurdles and to kind of help out. So that's what coaching is for, man. And like I said, I'm at a point now where I don't normally push this stuff, but I'm like, man, this is who I am, and I gotta nurture my team, man. And I gotta make sure that I'm throwing this out here, man. But I want to see y'all on that schedule, man, so I can get y'all from where y'all are to where y'all need to be, man. I already put this on social media, so I'm gonna say it again. The rest of this year, it's going to be the most profitable of my career. So if it's not for y'all, it's because, y'all got left on that train, man. So I'm just telling y'all, get those things in order, man, so we can do what we need to do. It practically pays for itself, and y'all can take advantage of a lot of these trades, because if y'all notice, I've been holding back lately and putting more charts out there. I've been putting more analysis out there, but because I gotta leave some room for my team that's been here for a while to be growing too. I'm gonna call out the trades, but I'm gonna be leaving some room for y'all to do some things too. And for just to keep the growth going in this group, man. And just to make the learning experience a lot easier. But if y'all have questions about anything that's going on in the group, man, make sure y'all ask these questions. It ain't gonna be a lot. Y'all see, last week was the first week we ain't had drama the whole week, so we got a lot going on. I say drama, it's just been mostly, it hasn't been a lot of complaining. It's been a lot of, you've seen a lot of chart action. So now you open the chat, you should be able to find the last thing I posted. You should be able to find updates about what just happened in the market and what's going on. So we could really, you know what I'm saying? So just let's try to keep that momentum going, man. But I need y'all up here with me, man. So we could, I want to be able to look back and see that I got, y'all, some of the guys in the group that have been around for a while. So y'all got the mental toughness for it. So yeah, just put that money in there into your coaching, man, and don't blow it on these trades. Because like I said, the earnings trades and Sai, you asking about Disney earnings, man. Take that money from the Disney earnings and book a one-on-one, bro. Or I'll put you in a play on Monday or Tuesday or Wednesday to pay for your one-on-one. And let's do that.
That sound good with me.
Yeah. So, but yeah, man. So, but no, enjoy the rest of y'all Sunday, man. I appreciate y'all, man. And yeah, we got this, man. This blessed.
Yes, sir. Definitely
Yeah.
appreciate it.
Hey, Antoine, I do have a question,
Yes,
bro.
sir.
Yes, sir.
What's up?
Hey, just really quick, for your one-on-one schedules, do you have anything after 6 o'clock now? Or are you still basically done at 6?
When you say after 6 o'clock, I mean on Saturdays, you
No,
know.
I mean like during the week. Do you have anything during the week?
I mean, I could it depends. So like what type of, is it just like for 1 hour or 2 hour?
Probably just like a 1 hour.
1 hour, what time?
Probably be like 8 if that was possible. Or is that too
mean,
late for you?
I could, I mean, I'm always up looking at charts and stuff like that. So, I mean, if I know, I mean, I could, so just let me know what day that you're looking to do it and I'll have you schedule it and we can I'll just change the time to that, whatever time it is. But yeah, cause I typically don't open them up for that time because those, I normally have them because if someone was to book a 2 hour one, it would go for that length of time. But yeah. So you could, yeah, so just let me know what date and you're gonna book it and we could, yeah, it'll be for, you can do it for from 8 to 9. Because if it's a 2 hour, then I probably would say no, but yeah.
All right, cool. Thanks, bro. Appreciate
All right.
that.
No problem. But all right, y'all, man, I'll see y'all in the chat, man. It's gonna be a good week. Peace.
Yes, sir.
Appreciate
Have a
it.
good one.
Bro,
See you guys
appreciate it.
No
later.
problem.